All right. I put this little question in here and I've got the answer circled already. It says, which of the following is not an essential part of the accounting records? The journal is most definitely, the ledger, and the chart of accounts. These are all essential parts of the accounting records. The end of period spreadsheet, however, I want to bring up because this is an optional step. With the textbook that we're using in my classes, you will see this listed as part of the accounting cycle, and you'll see plenty of references to it in the chapter. I just want to mention that the reason that I don't mention it is because it is not an essential part of the accounting records. All right, let's move on to something more related to what we're talking about. It says, use the adjusted trial balance for Stockton Company below to determine the net income or loss for the period. So we have an adjusted trial balance, okay, not an unadjusted, but an adjusted, and it is in the correct order that it should be in: current assets, long-term assets, current liabilities, equity, income statement, items, revenues, and expenses. So if we were to think about that, now we don't have to make an actual income statement here, but I do want you to understand that when we're talking about net income, we are talking about the income statement. So there are an awful lot of numbers in this little exercise here that we can ignore. We don't have to consider them at all. Matter of fact, we could just put a line right here, and everything from dividends on up, we don't need. So all we really have to do here, move this up a little bit, I apologize. Fees earned / revenue is, what is that, $92.50. And then all we're going to do after that is we're just going to take all of these expense items. Let's see, it was $2,500 for, what was that, wages. Wages expense. Then we had $19.60 rent expense. Then we had utilities expense of what was it, $775. We had depreciation expense of $250, and then we had a miscellaneous expense of $185. Now, why do you think this $92.50 is over here to the right and these expenses are over here to the left? And that's the same way that we have it up here. Notice everything on the left has a normal debit balance, and everything over here on the right has a normal credit balance. So we're going to move this up here. We're going to put a little line right there. And then what we're going to do is we're going to hopefully grab a calculator here sometime today. And we're going to take $92.50 minus $2,500 minus $19.60 minus $775 minus $250 minus $185. And that's going to give us $35.80. And this represents net income. Okay, net income is $35.80. All right, so let's switch out our sheets here, and we've got another little exercise here, and we have, looks like to me, the exact same numbers. But now we're being asked to do something a little bit different. It says, make the required closing entries. Okay, So if you recall, we're going to have 4 of them. So what we're going to do, let me see here real quick if I can get this. So again, we're going to be making closing journal entries. Okay. And let's see here. So December the 31st, the first thing that we're going to do is fees earned, our revenue account, this $92.50. We need that to be 0 by tomorrow, by January the 1st. So if fees earned have a credit balance of $9,250, what we're going to do here is we're going to, I'm sorry, I started to write revenue. We're going to take fees earned and we're going to debit it for $92.50. Okay, and we're going to credit income summary for the same $92.50. All right. Then, on the same day, December 31st, we have to take all of these expenses, 1, 2, 3, 4, 5, and we have to make a closing entry for those. All of these expenses have debit balances, which is correct. So we're going to have to credit them to get those to 0. Because just like the fees earned needs to be 0 tomorrow on January 1st, so do all of these expenses. Because our depreciation expense is only for this year. Okay? So, what we cannot do, I mean, we can plot our income summary here as a debit. We don't know how much it's going to be for yet, but we can go ahead and put it there. And then what we're going to do is we're going to credit wages expense for $2,500. We're going to credit rent expense for $1,960. We're going to credit utilities expense for $775. Depreciation expense for $250, and miscellaneous expense is going to be credited for $185. So we're going to, let's do this. Let's bring our calculator back over here real quick and just add these up. $2,500 for wages, $1,960 for rent, $775 for utilities, plus $250 for depreciation, plus the $185 for miscellaneous expense, and that gives us $56.70. And so we're going to debit income summary for $56.70. And when we do that, when we make both of these journal entries, we will now have a 0 balance in fees earned, and we will also have a 0 balance in all of these expense accounts. Now, I'm being pretty sloppy here. I'm not doing journal entry explanations, but please do keep in mind that I'm trying to keep these videos from getting too terribly long, okay? So those are 2 of our entries that we've made. All right. Now what we need to do is we need to get rid of the balance in income summary because we don't want it going forward either. So I'm going to bring our calculator back over here. Now we should already know the answer to this. I'm going to take my $92.50 credit balance minus my $56.70 debit balance, and that gives us $35.80. $3,580. And if you recall, give me one second. if you recall, that was our net income. Okay? So hopefully you can see how this all ties together. So 3580 is the difference between this 9250 credit and this 5670 debit. So if we have a credit balance, our third closing entry on December 31st, okay, is that we are going to, make sure I have enough room here, we are going to debit income summary, and we're going to credit retained earnings. I'm going to abbreviate. That's retained earnings. Okay, and it's going to be a 3580. Well, may have made a mistake there. Let's see here. We're going to debit income summary for 3580, and we're going to credit retained earnings for 3580. So that, let's think about this now, that net income of 3580 had a credit balance, and that's going directly into retained earnings here. Okay, and then we're going to make one more little adjusting or closing entry on December 31st. Now what we're going to do is we're going to debit retained earnings, and we're going to credit dividends. And the amount is, let's see, right up here, $790. So this entry lowers our retained earnings. So if we were going to look at a retained earnings statement, for example, we would have our beginning retained earnings plus net income for the period, which is actually this 3580 here that we already calculated in a previous exercise. Then we would show a subtraction for dividends. So if we wanted to talk about if you wanted to know what was my final, how much did retained earnings go up by, it would go up by $27.90. That's the 3580 here in net income minus the dividends. Okay, but we're going to do it here in 4 separate entries. So the first part, just to review, is we are going to debit fees earned to get them to 0, and we're going to credit income summary. Then we're going to credit all of the individual expense accounts. Okay, we can't do it all as one number because we have to get all of these individual expense accounts to 0. And then we're going to debit income summary. Then we're going to take the difference between these. So I want you to understand this particular entry here, this debit entry to income summary, is only because the credit amount was higher. This means we have net income. If we had had a net loss here, we couldn't do it this way. This entry would be reversed. And then this fourth entry here, we're always going to, will always be this way. We're always going to debit retained earnings for the amount of dividends that we have paid out. So the question only asked us for the 4 entries, 1, 2, 3, 4. We have done them all.